Yo, what's up guys? This is Jeremy from Prosperous Academy, and I'm coming here with a video where I'm breaking down AUDCAD for you. And why AUDCAD? Those that know me know that it's not directly one of my favorite trading pairs, but we got a perfect A+ setup on this one, so I want to break it down for y'all. We're on a monthly time frame. There's no doubt about that we're going down, that we have a bearish bias. We are in a downtrend, lower lows, lower highs. So we zoom in directly to the weekly time frame. And on the weekly time frame, you can see that market was trying to take out this top here that was created in April 2022. And it didn't manage. No weekly candle closed above it, so therefore there was no market structure shift. But on the other side, we have managed to take out this low here, create a break of structure. As you see, this candle actually closed below it. So we had a perfect break of structure there. And we have, if we pull the Fibonacci, done a very good and perfect retrace up to the sweet spot zone. So we tapped the 50% and retraced from that one, and have found support of the 23.6 on the in reverse side. That's where we bounced up from. So if we go to the daily time frame now, then what we will see is this here. We tapped into the sweet spot, we tagged this order block up here, and actually grabbed some liquidity just above it to then start dumping up and selling. And on the retrace from the sell, if we remove this previous Fibonacci, then we will see this. That once again, market came in perfectly, tagged in the sweet spot zone of this last swing on a daily time frame, of this last major swing. Tapped into the sweet spot zone, didn't manage to break through, left this wick, these exhaustion wicks here, and from there it actually pulled it down, broke through the 50% support, and it's not coming back and retesting. If we zoom in a little bit, then we will see this, that we actually have been consolidating like crazy, to be honest. You see the zone here, massive consolidation, and the only thing we basically been waiting for, because as you see, we have created an uptrend here, so we are trending upwards on the lower time frame. What we were waiting for was a break of structure. Not even that, we were waiting for a change in character. So where did this uptrend create its last significant high? Well, it's this one here, right? And the low that created this high, so this here is the high, and this here's the low that created that high. That low got taken out where? Here. So there we experienced a market structure shift on the 4-hourly time frame. And that was basically what we were waiting for, to get a confirmation that this trend here now is turning bearish. All right. Now, market broke out of the sweet spot zone, and of course took this low. And on the retrace is where we want to find our entry. So the retrace basically has already happened. What we're waiting for is the second tap so that we can enter this trade. So the trade entry is literally from this order block right here. So here on the 4-hourly time frame, you will see an order block. That is the order block that actually created this break of structure and market structure shift as well. So it's a very strong order block. It left this fair value gap behind it, so you can see this fair value gap here on the 4-hourly time frame. That's the fair value gap. But we don't want to clog things up, so we are actually going from the order block, because the order block is our point of interest that gives us a good discounted entry. So as you see, market has already tapped into this order block once. Okay, we are looking for the second order, a second tap in. So therefore we're putting our entry right here at the beginning of this order block, but we're using this whole zone here as our entry zone. So our stop loss will be here above these highs and 50% in to this candle that you see here. What is 50%? Well, you pull out the Fibonacci, and then you will see that 50% is right here. So it's right above these highs here. You can even mark it out like this. That's the 50%. So we want to have our stop loss right above that. So confluently, you see the 61.8 is there as well from the Fibonacci, the big swing that we had on the daily time frame. So we're putting our stop loss right above there. So we have a 38 pip stop loss on this one. If market retraces further up, you want to keep stacking orders here. You want to keep stacking entries. So you want to basically scale into this trade, build this trade up, all right? Don't rush because it's running away. Don't rush into it. If you miss it, you miss it. Then you have another chance on another trade. Live the trade another day. But the take profits that we were looking for on this trade are, and let me zoom out now again so we can see it more clearly. So the major take profit I'm looking for is actually the 27.2 down here. Now it's a long way to get all the way down there. That's actually a trade of 260 pips. So it's not a small move. That makes it a swing trade, of course. Along the way, what we will do is we will of course take partial profits. So we are looking for levels to take partial profits from, and those levels could be different retracement levels on the Fibonacci. So let's look at this here. Boom. We have this low, we have this high. This is the last swing, right? What we're looking for is PDRAs. We're looking for liquidity levels or zones that are co-influent with Fibonacci levels, okay? Because we have a lot of liquidity levels, so we need some form of co-influence. So my first take profit would easily be this order block down here, which is co-influent with the 50%. So this is a 4-hourly order block, and I'm putting my first take profit exactly there. Boom, that's one. Now the next take profit will be, and I gotta say it also, of course, when market hits this take profit, you want to move your stop loss down to break even, and that's a take profit of approximately 56 pips. All right, so you're already in a good profit when you're taking that. Now the next one will of course be these lows down here. Now I will zoom out a little bit to see how it looks like with the order blocks and liquidity levels. No major PDRA down there. It's a lot of choppiness on the daily time frame, but we will definitely see the market tag these wicks and these lows here. A lot of liquidity is resting there, so we're putting our take profit just above. Boom, like that, and that will give us a take profit of 118 pips. So about 118 pips. And the last one, I will let it run down all the way to this level here, the 27.2 Fibonacci extension, and that last level is 231 pips. So the full trade is 231 pips. So it's an A+ setup. Everything is aligned. It's a perfect trade. You want to scale into this one. I'm risking about 1 full percent on this one if I get the possibility to scale in fully on this trade. Currently I'm in with about a third of my full position. I have sell limits along the way here, and that's basically how you want to treat this trade. If you want to learn more about how to put take profits and stop loss and how to find A+ setups, then I highly recommend you to join our free academy, Prosperous Academy. Link is in the description box below. If you like the content here, then please like and subscribe to this channel. And with that said, I hope you catch a big one with this trade, and I'll see you on the next one. Peace.